Good morning, everybody, and welcome to this morning's webinar with Finder Energy. My name is Matt Warner. I'm here with Managing Director and CEO Damon Neaves. We've had strong interest in the call this morning, and I think that's a reflection on the profile of the company and the project itself. As we work through today, the format will be Damon and I will have a bit of a question and answer session, a bit of an informal chat. And we will, you will know through the process while you're sitting on the call, you have an ability to submit questions. So at the end, we'll take as many of those as we can. Probably be a 15 or 20 minute sort of call all around, and we look forward to as much engagement from people as we can. So Damon, first thought I'd get an update on the KTJ project, but let's first go to the capital raise. Last week, you raised $27 million at 50 cents. We're so close to FID. Why raise that money now?
Yeah, thanks, Matty. Look, it became apparent to us towards the end of FEED when we're in the market procuring the subsea equipment that for certain items, these are things like the flow lines that carry the oil from the wells to the FPSO, certain components of other equipment, components of the Christmas trees, parts of the umbilicals that carry the electrical signals and the hydraulic signals that control the oil flow, and microchips that are in high demand. A lot of competing demand was emerging from other projects that are meeting financial sanction around the same time as us. And the relationship wasn't one-to-one. If we didn't commit now to this equipment, secure slots, the next slot, to come available might be, 8 months later. So the overall effect of not moving now and committing to these items was perhaps to delay first oil by up to 12 months. We weren't prepared to do that. Our overriding priority here, our primary objective, is the acceleration of first oil, and we see enormous value in unlocking the cash flow potential of this project. So it was all about de-risking the project timeline. And the reality is, in an acceleration project, it costs money. You have to make commitments, and you've got to be prepared to do that. So we've taken the steps that were necessary to preserve and protect that timeline to first oil. And look, we did the same thing when we acquired the Petrial. An early FPSO solution was the only way to get to FID mid-year this year. So we're doing what's necessary, and we're doing it again with the long lead items. And I think now, I'd say more than ever, with oil trading at over $100 a barrel, we need to remain focused on that first oil target in late 2027, early 2028.
Okay, so it definitely sounds like a positive step there. Is it common to make those sort of commitments at this stage?
Yeah, look, it is, and there's plenty of examples. We saw it with Greater Western Flank, Phase 4, Louisiana LNG, and there's numerous examples worldwide. You see it because it's a way of de-risking your supply chain, and that's exactly the reason we've done it for here.
So the next big step really for the project is FID. So can you talk us through that, and how confident are you about getting to that in the timeline that you envisage?
Yeah, thank you. Look, we're all in. We bought the Petrial, and we've now committed to long lead items. So FID is happening. There's always some level of irreducible risk in every project, but we're kicking goals and we have momentum in this project. There are a number of ongoing work streams. The main ones are regulatory approvals, the debt process, and a contracting work stream. But all of those are progressing well, and we hope to tie everything together for FID around mid-year this year. I've always seen the main challenge for this project as securing the funding. And I think that's a big risk-off event when we close out on the debt process. We saw that in 2025 when we announced the farm out that secured a promoted share of CapEx. So I see the debt as a big risk-off event, and I think we'll see another inflection point in the stock, perhaps even bigger this time around. With the debt, we went out early to groups, and we're running a tight process to a strict timeline under the stewardship of Barrenjoey's debt capital markets team. We have strong interest from a broad spectrum of lenders, and we're confident around closing out that debt process. So of course, there's a lot of work to be done to close out on the work streams, but we have a very dedicated team here at Finder. It's backed by SLB's global procurement power, and we've proven our ability to execute and deliver on this project. So my money's backing the Finder team for FID around mid-year.
Okay, excellent. There's certainly interesting times all over the world, and particularly in the energy sector. To ask you for a bit of a view on oil price, and specifically where you see that price going in 28, 29 when the production starts to come on for your project, and you're producing a hell of a lot of barrels.
Yeah, look, we've been waiting a long time for a big run in the oil price. Look, my view, this isn't just a price shock. There's a number of other factors that have been exposed here. Firstly, there's been enormous destruction because of the war in Iran and also Ukraine. Russia's lost about 20, perhaps more % of its export capacity. I've seen estimates of around 60 billion in damage to oil and gas infrastructure in the Middle East. It's too early to say how long that will take to reinstate, but it's going to be years. The conflict has also exposed that there's no swing producers anymore. That means we're going to be more prone to these oil price shocks in the future. You can't just turn up the dial on supply if something's knocked out of the system anymore. We're in a time of geopolitical insecurity right now. Wars in both Europe and the Middle East, and I think localized conflicts are going to become more frequent, and that has global repercussions. And I think the other thing that's been emerging for some time, but is now starting to be better understood, is that the energy transition has killed investment in reserves replacement. There's been, I'd say, chronic underinvestment in the industry in reserves replacement for more than a decade. And all of these things are going to have put upward pressure on the long-term oil price. Look, where we'll be in 28, 29, I think your guess is as good as mine. We're already seeing that dated Brent curve increase. It's now into the 70s, the consensus view. But what I can say is that it's certainly a good time to be developing oil fields in a peaceful part of the world with free shipping lanes. So the timing, perhaps for all the wrong reasons, but the timing is working out really well for us.
I think that's an interesting point, particularly where you're located and separate from geopolitical events, and the ability to deliver product into Southeast Asia is a great spot to be. So just what's the oil price sort of upside from here for the project, and how does that impact what you're doing?
Yeah, the big sensitivity for this project, as with really any offshore project, is oil price. In the case of Kudetasi and Jahal, the majority of our costs are fixed, especially where we own infrastructure as we do. There's, of course, some variable component, but the project is very busted on the downside risk around oil prices, but we have enormous exposure to the upside. We've been running $70 oil forecast, which is below where dated Brent currently sits in terms of the consensus views. And as you know, oil price is currently trading well above $100 a barrel. But in 2028 and 29, we're forecast to produce around 15 million barrels. The maths is pretty simple. If you add $10 to the oil price, say $80 a barrel, in those 2 years, that's going to add $150 million in oil sales in those years alone. So time will tell, but I think a great position to be in to have that upside exposure in oil prices, given the broader the broader context and the geopolitical uncertainty in the world right now.
Yeah, very good. So probably worth just a reminder to everybody to submit questions, and there's a few coming through, so thank you. But just like to finish on sort of upcoming catalysts before we move to some of the questions. So, busy time for the company and the project. So what's coming up that people can look forward to?
Yeah, thank you. Look, you're going to see a lot of things come together. We're in the home stretch to FID. Things like the debt, we'll be contracting a rig. There's a number of other major contracts. We're deal makers here at Finder, and we have plenty of surprises to come. As I mentioned before, I see the potential for a significant re-rate off the back of securing the debt. It's a major risk-off event for the project, and I think we'll see that resonate in the market just as we did with the farm out deal last year.
Okay, very good. So a couple of questions. There's a couple around, given the current rise in the price of oil, why have we not seen this sort of reflected in some companies' share prices, do you think, on the ASX? Hasn't been a huge flow through in some instances?
Yeah, I think, look, in part, I think there's a view that this is an oil price shock. It's a short-term thing. For the reasons I conveyed a moment ago, I think there are some medium and longer term implications for the oil prices that have been highlighted by these events. So look, again, I think what matters is where the oil price sits for us in that critical 28, 29 period when we are going to produce a lot of our reserves. So we'll wait and see. I think we can't control the oil price. Our focus is on keeping costs down and getting the project to first oil on time.
Yeah. Another question here around the support of Longreach. Obviously, they've been a big supporter and involved in the company since its inception. There's a question around they didn't take up a pro rata allocation, but a significant one nonetheless. It might be worth touching on that.
Yeah, look, Longreach have been a big supporter of Finder. They vended the assets in our IPO and have been there since then. They've maintained their position on the register. In some ways, we've grown significantly. We're a 300 million market cap company. So look, we don't expect them, as we grow, to maintain their position in capital raises. But I think a strong signal for the support that they were there for 5 million on this occasion. Longreach are a sophisticated group. They understand the oil business. They see a lot of value in this project, and they're right behind us going forward.
Yeah. A couple of questions around the FPSO. So I know that's been a busy project for you guys. So what's sort of been happening there and the latest on the boat?
Yeah, look, it's been good news for the Petrial. We've got a very strong partnership with Amplis, the previous owner, who are managing the planning for the engineering work on the modifications and life extension work. We've now completed the phase 1 engineering, and we got great results there. We've been switching on the systems, all the systems, running them, checking integrity, looking at what work is required to prepare the vessel for redeployment to the KTJ project. Really, the only material upgrade that's required is to the water handling systems. So I think that's likely to be a new system altogether. But we've identified where we're going to put it on the deck. And I think we're very pleased. We've undertaken, I think, over 400 surveys of the different systems, and everything's working. So everything's on track, on time with the Petrial. We now move into the more detailed sort of phase 2 engineering work, which will more clearly define the life extension work largely that needs to be done in the shipyard campaign.
Yeah. Okay, great. And then probably coming towards the end of our questions. So if you've got any more, guys, please submit them, but we're sort of getting to the end. as part of the capital raise, there's been an SPP for an extra $3 million on top of the 27, giving you around 30. Just talk us through the logic of that and how people can support the company through that process.
Yeah, look, the placement was priced at a 15% discount to where we were trading prior to the placement. I think we wanted to make sure shareholders had an equal opportunity to participate in the placement, particularly because we see a number of catalysts coming very quickly now this year, and particularly in the first half of this year. So look, we want to make sure our existing shareholders that have come on the journey with us get that opportunity. Recognizing though that the nature of the register is changing as the company has grown, and when we saw strong institutional participation in this book build. But look, we get a lot of support from our shareholders. I think so many people on this call, it demonstrates the level of interest we're seeing in the company and the project here.
Okay. Just stepping away from Timor for a minute, question around the UK assets and the political environment there. Are you seeing some improvement, and what's the outlook for that portfolio?
Look, we are. I mean, as you might expect, the energy crisis is forcing governments to revisit their sort of net zero, Green New Deal policies, particularly the UK. I think there's been a number of public statements made by ministers recently. So things are looking more positive there. Our strategy there for some time has been minimise costs. We operate that acreage, and we're paid by our partners to do that. So there's minimal cost exposure. A couple of areas in particular there, the wagtail opportunity there, where we farmed out to Serica at the beginning of the year. We're doing a lot of work looking at how we'd commercialise that discovery and tie it back to the Triton facilities owned by Serica and Dana, our two partners in our block. And also the block we have with Equinor with the Boas prospect is looking more interesting. There's been some discoveries up dip there. So we're starting to get our heads around that opportunity technically, and again looking to crystallise the value of that opportunity through farm out.
Okay. And probably the last one, and I think we did touch on it, but there's just another question about the debt financing approval and the sort of timing and how that's lining up. Obviously, a very important step.
Yeah, look, the process for the debt has really aligns with FID. So we're targeting financial close for the debt prior to FID. We started that process last year really with roadshows through on the East Coast and through Asia. Off the back of those roadshows, we got strong interest from groups, and we've gone out to now selection of the sort of high conviction lenders that came back following that process. We've got their feedback on the debt structure. It's a conventional RBL structure. There's nothing particularly unique about that. I think now we're going through the due diligence phase and the formal documentation phase to close that out. But the process being run by Barrenjoey, and the process is going very well.
Okay. Right, I think we will make this the last one, but there's just a question around the sort of, and we've touched on this a bit, but just to reiterate, just sort of the sequencing of work streams and things you need to get through. So there's a question here about FDP, rig contracting, and all those sort of things. So how do you see all that sort of rolling out from a project perspective?
Yeah, we're working on all those work streams. Look, we did publish while we're in the announcement that we put out recently has the project timeline, which has all of the work streams to FID at a high level. But they're the key work streams as I see it. We're in advanced discussions around a rig. the debt process I've described is progressing well. Lodgement of the field development plan is imminent for regulatory approval. And there's a host of other procurement, engineering, and contracting work streams. But we're actively managing all of those work streams. As I say, we've got a good team. We've got very good support in the form of SLB and other contractors that are working with us on those work streams. And we have a high level of confidence around FID mid-year.
Excellent. Okay, I think we'll leave it there. So thank you very much, everybody. Thank you for your time. Thank you for joining us. Keep your eyes out for more updates from Finder, and we look forward to talking to you another time. Thank you. Good morning.